I know you hate forecasts, but everybody's doing it. It's below 130. It's at 129. How low can it go?
Look, I think a lot further from here. I mean, we suggested before the vote, we said, 115 to 120 was possible. We think in 3 months we could be around 125. So that suggests probably, perhaps an overshoot in the near term, but still headed lower. The uncertainty is still too great.
The uncertainty is there. It's going to last 2 years.
Well, look, it is. No one knows what's happening with with politics, although that's not a huge driver of the market. But just when this Article 50 is going to be invoked, just what the outrun is going to be. Markets don't like uncertainty. We have a lot of uncertainty with global growth, and this really just heaps further pressure on us.
Well, incredible here that there is no plan B for a lot of conglomerates, a lot of UK-exposed companies, a lot of UK companies itself. No plan B. Any plan B for investors?
Look, I think plan B to investors is to continue doing what they're doing now, and that's to to hedge their risk and to sell sterling against against other currencies and look to other currencies which might be affected as well, because the impact is certainly going to last.
Patrick, it's Anna here in London. I'm interested in what you think is priced into currency markets at the moment when we watch what's happening to the pound at this 31-year low. I've been increasingly reading about how the letter of the law on the Lisbon Treaty says that we need to have a negotiation for Britain to leave, and only after Britain has left can trade talks then start, which seems to be pushing the time horizon for any certainty around a trade deal even further into the distance. Do you think the pound even knows what to price in at the moment, let alone what the answers are?
No, I don't think we do know or the market knows what to price it now. I think we need to accept, though, that we are, as we mentioned earlier, at 3-decade lows. That the currency has fallen nearly 10%, from the time of the vote. So that is, that does cover some of perhaps the trade tariffs which may come in. But the missing ingredient to all of this is demand. Demand is weak, uncertainty is only building. So I think until we see some hard evidence of what the solution is going to be or what the outrun may be, then further weakness in the pound looks to be looks very, very set.
And in terms of investor sentiment in the Asian FX trading session, do you think that investors are watching the read across into the euro and saying, well, there's a little bit more safety in the euro than there is in the pound right now, so we'll seek haven there? Or are they saying we'll stay away from Europe as a whole because we just don't know where the domino effects of a Brexit go next?
Well, that's true. We would look at the euro, particularly against the dollar, as having held up very well to date. As we talk about internally and with our clients, that there's a case to be made when you want to sell a euro, you've actually got to buy the dollar if it's you're looking at euro dollar. We would think euro is now, though, susceptible to further weakness, against a range of currencies, certainly against currencies which have yield and growth, say like Australia and New Zealand stand out in that regard.
Well, that's a great point that Anna made. I mean, safety haven, but forget the euro, as you said. I mean, you look at the Japanese yen; it's approaching 101, maybe 100. It got to below 100 the day after Brexit. Outcome shocked the globe here. Where do you see intervention?
Well, I think intervention has to match a few crucial factors. One is, are markets disorderly? Well, we could argue that they're heading that way. Are they volatile? Well, volatile suggests movement in both directions. We don't have that. It's one direction at the moment. And is it against fundamentals? Japan has a very strong current account surplus. It's a global creditor. We're seeing a bit of a home bias towards Japanese assets at the moment. So it's hard to say that all those conditions are met. I would expect we to hear more jawboning, if you like, if we get below 100. It certainly remains a risk, but I don't think it would be successful at this stage.
And very quickly, before I let you go, big jobs report, of course, that's what we're waiting for, right, when it comes to the Fed?
Look, absolutely. And look, I think the market is quite confident or perhaps optimistic in their outlook. 180 looks to be a bit of a stretch. I think we'll get the best indication from the employment component of the ISM non-manufacturing tonight.